we can go ahead and restructure.
When you do that, then you encourage the customer to default. Yeah. So what is actually laid out is the general term.
Okay.
What you would see are the general terms and conditions. I have an amount of money available. This is my interest charge. Okay. So if you agree to the interest charge that the bank is offering, then there will be an acceptance. Okay. And also on the basis of this, you'll be lent the money. Okay. But when it is lent, the general principle is that you pay back the principal plus the interest that is connected to it. Okay. That is what the bank can put across. But in the course of the relationship, if for one reason or the other a particular customer defaults, then it will be a case in isolation where the bank would have to engage that particular customer and see how best they can restructure the loan and have it paid. Okay. But it cannot be taken as a popular maxim. Okay. But when you do that, then you're encouraging everyone to toe the defaulting line.
Now I have a question here from yes.
Yeah.
I
want to add up to what Doc is saying. I think that from the question that you asked, I believe that the whole banking policy in terms of the lending rates and those things can be reviewed. As the president put it, it is very important that when, for instance, if you are giving out loans and people are coming for it and the interest rate is high, more or less you are also encouraging defaults. You see. But if the interest rate is reasonable, within the payment strength of most customers, then of course you are also trying to reduce the incidence of defaults.
Okay. Now, I have this question from a viewer. You want to say something?
Yes. Let me, with regards to the president's submission, I did not bring in that because the Bank of Ghana has made it clear, and I've mentioned on this platform. For once, we are treading on the parts of other jurisdictions, which is very good. That is the Bank of Ghana not sitting aloof and allowing the dictates of the market to always determine what interest the bank should charge. Okay. We have the reference rate, which is the 16.82%. Okay. Even though the policy rate is 17%, the Bank of Ghana has announced a reference rate of 16.82%. What it means is that if you walk into any bank to contract a loan, you shouldn't just keep quiet and observe the bank quote any rate. Where the bank starts from should be 16.82%. Should tell you actually it's 16.82%, but I want to charge you hypothetically 1% for liquidity risk. I want to charge you 2% for default risk, and then if you come to terms with all of this, the total interest rate will be quoted to you. But as I said, the banks. Let me make this clear again. The banks are currently.
There's a question here for
the banks are now charging 35%, 37%, not because they do not know the writing, because most of them are strategically using this as a bait to shy customers away from borrowing, so that they will be able to meet the minimum capital required of 400 million.
It's not fair.
No, in the world of finance, to some extent, it is, because if the bank should openly tell you, the bank will be driving its customers away. So it's a strategic way of doing that. Now, when it is able to meet the minimum capital requirement, it will bring down the interest to the barest minimum.
Now this is for you and Bernard. Now this is from Amadou Petit Azure from Boko. He says that prime rates has reduced to 17%. Why is the interest rate in the bank still high at 30s?
That's what I just explained.
Yes, that's what you just said.
The explanation did not come before his message. So yes, most of the banks, as we know now, are in the 30s just because they want to shy customers away from borrowing, so that they will be able to at least have the 400 million to show by the end of December that they've been able to meet the minimum capital required. Others have also have their funds locked up in non-performing loans. Through what I mentioned, poor operational risk management strategy, and therefore it is difficult for them to have liquidity, to have liquid funds to contract new loans. So yes, they are in the 30s because of some obvious reason. Now, government share of the debt non-performing loans is being cleared, and I'm sure by the end of this year, by the beginning of next year, when the government has been able to make justice to her share of the total debt, the government will be in a pole position to enforce and ensure that the banks prune down the interest rate to the barest minimum. Because if it is 17 and you are hovering around 30%, what you're telling borrowers is that their risk level is too high, and therefore you can't gamble with the available funds.
But you want to add to that?
Yes, I was thinking that from 17% to 35% is huge. That's about 100%.
It's even more. It's about 110%.
And I think that, you see, in ordinary marketing terms, all right, we believe in, we don't really believe in profit, but we believe in the maintenance of the customer in the long term. So we look at the lifetime value of the customer, not the present value as it is in finance. You understand?
All right. All right. So
but you see, the lifetime, you know what he's basically talking about has to do with working on the psychological state of the customer. And if you are to get a peso each from the customer for a lifetime, it's better than getting 10 cedis today and then losing the rest. That's basically what he's trying to drive home here.
Oh, okay. Let me see now. Okay, this is from. Okay, and let me just do one more, and we go. Okay. Okay. All right. Let me just take your. We don't. This is how far time would take us. I just want to take your final messages on this briefly. You have a minute each. We don't have time, so let me start with you, Bernard.
Okay. I think that the whole process of rebounding is a good idea. When you look at the sub-region, the sub-Saharan Africa example, and even in the Americas, you realize that all countries that have engaged in these things have successfully come out tops. For instance, the recent one by Nigeria, which came up around the 2000s, have been very useful. That's why you see Nigerian banks spread throughout Africa doing, banking, and competing very, very well as regards to our indigenous banks who are struggling, So I think that if the idea is to recapitalize the banks and then make them more resourceful, give them more strength, to compete, then I think that it is is good in the right direction. Meaning, in the short term to long term, our banks will gather that strength and even do banking in other foreign countries. So I believe that, but my problem is the expertise and then the structures that will go into it, where we can really monitor some of this financial fraud to the extent that whatever the government is putting in will bring some wealth to the country, but not to individual pockets.
All right, Doc, you have 1 minute, and tie in this one, please. Just tie this in the 1 minute. This is from a viewer. It says that if the loan was structured and given the customer to contribute an amount of at least 5 Ghana cedi, and still he or she refuses to pay the loan, what step can the bank do again to help the customer? And then wrap up 1 minute.
Yes, as I've said, in most cases, not in some cases, in most cases, the banks engage in what you call the cost-benefit analysis. Here's the case: if it has been reduced to 5 cedis and the customer in his or her financial position is unable to pay, it is up to the bank to make the necessary permutation. If I'm to send my staff to this customer's location on a daily or weekly basis, how much would it cost me to send the employee to that particular location, the fuel, and then the hourly rate I pay the employee? Wouldn't even one visit be more than the amount the customer owes me? On the basis of this, the bank might not overtly tell the customer, but would implicitly write off the loan because it is not worth chasing after it. So over time, the bank will make another decision. Now, with regards to the current development, as I mentioned, it's a healthy one. If you're able to recapitalize, what it means is that we are increasing the capital base increased the minimum capital of the banks, to about 333%. In terms of growth, we increasing the growth to 233%. Now, what we are saying is this: it means if the banks were initially able to make loans of about 30 million Ghana cedis, they may be able to at least double the loans. And if you are to get 20% even on the loans, if it is 30 million, you reckon in 6 million. If you double your loan contract to 60 million, you are making about 12 million in terms of income from the fees that you charge.
Okay.
So the current initiative is to help the banks expand their operations and also be able to help businesses that are looking for huge sums to expand their operations to also do same. So it has an eventual positive cyclical effect on the economy. Businesses would expand through the private initiative. The banks will be able to meet the needs of the citizenry through their improved operations. The recording of non-performing loans and poor performances would be a thing of the past.
Okay.
And the government of the day would heave a sigh of relief, and this would spread into future governance systems of the country. Okay. That is what we are all looking for, and therefore, as a nation, we are on course. The current impasse or the current situation in the banking subsector should not be seen as a negative. It is not a nemesis. Those engaging in panic withdrawals should humbly cease forthwith, because the government has put the necessary structures in place to make sure that the customers' deposits are safe and adequately catered to. This is the word.
All right, so this discourse is still on, and it's a very interesting discussion, but time would not allow us to go deep into this. I mean, there'll be other platforms to talk about this. I want to say thank you to my guests who have been in the studio, and let's see how things pan out when it comes to the indigenous banks and the profits and all that. All right, so coming up next, we're going to have a feature on the Kumasi Cultural Center.